Alrighty, alrighty. Doc here from North America. Good morning, good afternoon, and good evening. Another fun-filled day. What do we got going on today? We have the inflation numbers coming out within 1 hour. That could be very entertaining. We have, what do we have up on the screen right now? Oh, there is the Swiss. You can see the Swiss, the dollar itself, is kind of, I guess you could say it's kind of firm. I don't know. It's green hinkies. You can see that much. You see over here, it's flatlined the last couple of days on the Swiss. I mean, it's just flatlined. When's the last time? We saw a flat line right there for like 3 days. And then your hook or cup and saucer thing go. And that again is doing it again. I guess now it's at 1, 2, 3, 4. This is the 5th day. We'll see how the end of the day goes. It's hard to believe it'll be sitting here because, again, the inflation number comes popping out very soon. And with that popping out very soon, then what we see is, the markets will move, that type of thing. That's how it always works. Markets move. There's more buyers or sellers, or more sellers than buyers. It's always that particular process. So, what else can we say about the Swiss this morning, or the dollar? That's what we're really looking at, is the actions of the dollar itself. And let's see, right there, see the weekly, just kind of cruising along. It went into the buy down in here, and it hasn't really gone much. I mean, it goes up, comes back down to it, up. Now it's flatlining for this news this morning. That conversation I had yesterday with you all, about the exchequer coming out and telling them, hey, you don't need a raise, the head of the exchequer. Well, obviously a lot of people are saying, who are you to tell us if we think we're worth more money where we work, or don't need a pay raise when we think we do? And I guess it's this, I guess I always call them socialists or communists, but what it really comes down to is the professional politician and bureaucrat who, I guess, like you can see it in the movies, like was it the world? Is it the world according to? No, it's the British one where they're trying to build a galactic highway, and Earth is in the way, so they eminent domain it and they destroy it. And then it's a Hitchhiker's Guide to the Universe, and so it's a British film, and so what happens is after a while, it's the bureaucrats running the galaxy, and you just see all this, fill out a form, this is not in the rules, things like that, and so I guess people are starting to get a little tired of that stuff, but we'll see. Anyway, the inflation numbers are going to be popping out soon. You can see here we've flatlined for the last couple of days because of it on the dollar, and that is that we're looking there at the dollar Swiss pairs trade, and as you can see, the last I'll put the cursor on it there. Where's Mr. and Mrs. Mouse? Right there. So you can see it right there, just kind of sitting dead. Look how tight it is there. I mean, and it's coming up. Yesterday it was tight. Boy, I thought it was tight yesterday. Look at that. I mean, you can see the high and low in there. Matter of fact, if we widen it a little bit more like that, and then let's see if we can do this. Widen it a little bit more like that. Wow. Just look how tight that is compared to a normal day. They're waiting, and you can see here the daily is trying to lift up. You can see it's breaking through the 0 line. It's in that buy right from there, but it hasn't really gone anywhere. And then when you go over to the J4X right here, you see the same thing. It's in the buy right there. Got the green hinkies matching up to our dots right there. But overall, it's really flatlining. It cannot get out of its own way at the moment. So, and I could say, we're seeing the same action in, I did see the cable up. Let's go over and take a look at the cable first, then we'll go take a look at the euro. But you can see the cable is trying to lift up in here. It was flirting with it yesterday with a volatility signal right there. And then here we get the volatility. It's lifting up. It's not big. It's very small. And you can see the weekly is, look at the weekly line. When's the last time we've seen, let's go back and look on our math. When's the last time we've seen, there's one right there, where it started to adhere to it by a couple days, just like that, a couple weeks, I'm sorry. That's one full, so was that 2 weeks total? And you see it was almost flatlined and then it started to break and it broke down. Now they're raising their rates, and because they're raising their rates, it's pretty hard for that to chill out, I guess you could say. You know, in other words, it's going to be more aggressive. But you can see it doing it right there, right before a nice move. It starts to flatline. This is going to be, I think, a little bit different in the sense that, you know, this number coming out in the next, 50 some odd minutes, basically could mean the difference of a quarter point increase or a half a point increase. Now remember, the people in charge in government right now and in the Federal Reserve and so forth, what I call the socialists slash bureaucrats, don't want any interest rate increase. It means that they can borrow more money for free. I mean, that's what it really comes down to. And a lot, the population is probably starting to catch on to that one. I mean, you think the whole European population would realize not only do they borrow for free, but they get paid to borrow. So the government not only borrows for free, but it's being paid by the population to borrow. Wouldn't that be great if someone knocked on your door? Hello, Mr. and Mrs. Dukascopy Trader. We would like to give you money, and we're going to pay you to take that money. Is that? I don't even know how to describe that at this point. And I can say this. They say, the calculations that we all try to follow, with the Fed balance sheets and just everything, the ECB balance sheets, the Italian balance sheets, the Greek ones, so forth and so on, from their central banks or their treasuries, Ministry of Treasury, show that it's about 14 trillion now in minus. So not billion, not million, but trillion. So they are borrowing money, 14 trillion euros at a minus, and they're being paid to do it. Boy, anybody want to raise their hand and say, can I sign up for that, please? Will you come knock on my door, hand me money, and pay me extra money to take it? I say, oh yeah, sure. All right, so you can see here the cable. Let's put it up on J4X. Right, yeah, you're right there. There you are. And you can see it's trying to do the little flat line thing right there too. And since we should put them in as candles just for interesting, see what it looks like, because I see the style. Yeah, there we go. Candles there. So you can see the same things going on there. It's really tight. Same group of days. Everybody's waiting to see what's going to happen. I myself, I have a hard time taking any of these bureaucrat institutions, so forth, too serious. I think it'll be a switch, just like we were explaining about the bond market a couple weeks ago, where it's the Wild West, and they're not even a list. It's not really a listed bond market except for over in the futures. So the bids and offers disappear in a matter of a tenth of a second. I mean, they're bidding something. They could be bidding for $50 million worth of Ford bonds or BMW bonds or Volkswagen bonds, and they can remove that bid in a matter of a second. Just remove it. Whereas on an exchange floor, there's a little bit more responsibility and so forth. That's why we call it a listed market. There's a place where it's listed, whereas in the bond market itself, it's not very listed at all. It's a over the counter. That's why they call it over the counter, because it's it can be removed very quickly. Like you're walking up to a counter, and the next thing you know, no one's there, and then all of a sudden someone's there, and all of a sudden they're not there anymore. Anybody stand in line and find that happen? And so you can see here the same thing's going on with the British pound against the dollar, or in this case, it's the pound against the dollar. And obviously as it rises, the dollar is going down in value, whereas on the Swiss side of it, right there, as it's the dollar Swiss. It's the reverse. So when it goes down, the dollar is going down, and when it's going up, the Swiss is going down. It's like trying to figure out the bond interest rate factor. All right, and then we jump over to the euro right there. You see the euro slid into that sell the last couple of days, and it is also where kind of going sideways. Now you can see it had done it there back in right at the end of the year, but then it started to at least trade a little bit more, with some action. But the last 3 or 4 days, it has been tight, and everybody's just waiting. We'll see. I don't, I don't. They're bureaucrats, so in my head, they won't do anything until they're forced to do it. That's usually the way it goes. It happens right at the last moment. They're forced to do it. They have to do it. But when they're not forced to do it, they won't do it. And what I mean by forced is that the population comes out with pitchforks and they're basically saying, we want this changed and we want it now, and we're going to vote you out and remove you. And then all of a sudden they change it. We did that here in the United States over the last 2 days. All of a sudden, the what we call the blue states or the Democrat states, 5 of them have dropped their mandatory mask requirements out of nowhere because the poll numbers are showing how bad it is, and this is an election year, and they're getting a lot of grief from a lot of people. Like, guess what? People are really angry at us. They may not vote for us, and obviously the politician normally says, oh, "No one cares. We'll remove the rules like the last couple months, and they'll forget about it. The population will forget about it, and then they'll come vote for us again." I think they've kind of stained our memory a little bit, so we'll see. And you can see here the euro trying to roll over on J4X. See that action there. And you can see the same thing. We've been in a daily sell on the Chicago quant side of it. And the weekly is kind of stalled out. So, this is traders, if you have positions on, I hope you marry them to binaries or calls or puts, depending on the type of position you have on. Just marry them for the time being for the next couple hours, because one thing you don't want to do is get stopped out of your position. And if you don't put a collar on it like a dog, you will get bit. All right, a sip of the tea there. All right, let's jump over to the Turkish Lira. One of the more hard to say after all these years, all of a sudden now the Turkish Lira has become, I guess it's the bigger question. The Turkish Lira has become one of the more responsible currencies, or have things gotten that bad that the Turkish Lira is now one of the more responsible currencies? Either way, it's one of the better currencies at the moment. So, whereas we've watched for years the poor Turkish Lira go down the tubes like nobody's tomorrow. Going from 1 Turkish Lira to the dollar to 18. That's what you call hyperinflation. And watching the euro go from the euro Turkish Lira go from 1 lira basically to almost 21 lira. So, that's not even, that's, I don't think you can say, I don't know how many more hypers I could say, but it's a lot of hypers and inflation, a lot of insane situation. But this is now one of the more responsible currencies, which is pretty cool. And as you can see there, it's kind of quiet now. Now it doesn't look that quiet, but then when you go like that, you go, oh, wow. But they wished it stayed like that for the last 6-7 years. And you can see it right here on the dollar Swiss. Right. We'll find it in a second right there. Dollar Swiss. We have a little box, a big giant rectangle set up just to show you how it's going to be trapped in that range. And as the months go on, you're going to be like, why has Doc got that crazy big long rectangle going? Because back here, we told you that what they're doing is very responsible. So it's a very good thing that they're doing for the population, for their currency. It's only just a little increase in taxes. I'll take a little increase in taxes compared to hyperinflation anytime. All right, let's take a look at euro Turkish Lira. Right there. You can see that same thing, a little firmness there, but still trapped inside its trapezoid, I guess you could say, or its big giant rectangle. See right there, that's the same thing. This is a little bit more dynamic. I find the Euro Turkish Lira definitely a much more interesting trading product. You know, it's much truer to its pattern and truer to its trend. And that may be just because of economic reasons. You know, I mean, you got to imagine how hard it is to move stuff from the United States to Turkey compared to moving it from, say, Greece to Turkey, which could be a challenge in its own right because of their geopolitical situations over the centuries, or Germany to Turkey, which have been allies off and on throughout the different conflicts of Europe. You know, it's right. It's just you put it in the back of a truck, and boom. Next thing you know, it's in somewhere in Turkey, or vice versa. You put it in the back of a truck, and boom, it's right there in Germany. So probably that's why we find that the Turkish lira is much more predictable, I guess you could say, and much more organized when traded against the euro versus the dollar. It's like a cost to carry type of thing, like a carry trade. You know, that means it's got to go all the way to America. You know, what's that, 6,000, 7,000 miles away? Probably about 7,000, 8,000, 9,000? 8,000, 9,000 miles away compared to, say, or we do that in kilometers, right? So 15,000 kilometers, and, you know, compared to, say, you know, 800 kilometers, big difference. You can put it in a car, in a truck, on a plane, you know, and it's going to be dropped off in a matter of minutes and hours. All right, from there we take a look at the Canadian. Let's see what the Canadian's doing this morning. There's the dollar CAD. And there it is right there. You can see it's also having its issues, not trying to go anywhere particular. And you can see the weekly is doing this little curve thing, and about, like I said, about 44 minutes from now, 43 minutes, we're going to hear a number that could be very important. What else can we say about the Canadian? Normally, this kind of clarifies the direction of like oil, gold, and so forth. But I think with the inflation number coming around the corner, that's probably why we've seen them breaking a little apart from each other the last couple of days. Now from there, what we'll do is we'll show you crude oil. Use the J4X. Now, you know what? Let's leave the Canadian on the J4X and let's go over to Chicago Quant. It'll be a little bit clearer. We're going to show you spot oil. Right there, you see it's trying to lift up again, but the numbers are still pressing underneath right there. Still in the weekly buy, of course. And you know, the bigger question is, are we going to see, you know, $100 oil? You know, that we're flirting with the 90s. And we'll come back to the energy sector and the metal sector, and we'll explore that. We'll look at the Brent and so forth, and the metals, and go from there. And then what we do is we take a quick look at gold. Right there. Usually that matches up to the way the Canadian dollar is trading. And there's gold. And it's down just a little bit, nothing major. It's been in a daily buy from the 1800 area. It looks like what the high is now is yesterday at $37, so pretty good move for the product. You can see we're flirting back into the weekly buy now. We'll see how that goes. We have noticed that inflation does not scare the metals complex. Sometimes inflation kicks up and our metals complex falls down, which is out of character over the last few thousand years, but that is what it is. You know, with QE is the dominant factor at this point. History is not, and QE is. That's quantitative easing, and for those that are a little unfamiliar with the webinar here, we talk about quantitative easing. It's something that was put into practice back in 2000, going into 2009. It started at the end of 2008. And that's where we are now. You see that there. Now let's do this. We'll take a look at South African Rand and see what the Rand is doing. Normally with gold going up or down, it usually moves the South African Rand, but of late, it's been kind of quiet. A little downwardly pressure. I would say it's probably flattish. You see here, two reds, pretty cool. So we are seeing some pressure on the product itself. You know, it's trying to move down, which is bullish for the South African rand and bearish for the dollar, because that's dollar rand. And then over on Chicago Quant, we're seeing the same thing. Let's put it up right there. You can see it moving down. So maybe the currency, which we kind of pay attention to the Canadian with oil, we pay attention to South African rand with metals, especially gold. And so I guess maybe we're seeing some concern about the inflation. And if this thing goes and takes out this low here, then maybe that will be confirming that the metals complex will start to pay attention. Now we got that low right there. So we were only expecting a little underneath the 15 at best. Oh, hey, 47, how you doing? Can we look at Nikkei? Sure, let's take a look at Nikkei. Let's see, go to there. Let's see what Nikkei is doing. Let's see, move it over to here. Go to, let's see, right there. All right, Nikkei. Right there. You see Nikkei is kind of flatlined a little bit there. Nothing, no real big action out of it. So I'm looking for that. There we go. Put that up there too. Your GBP JPY is lifting up pretty nicely. But you can see here what's that? That is yesterday, and that's today. It's about unchanged. You can see it's breaking down in our work right there. You can see we went into the sell there. Let's put that in. I guess it's the last time you looked at it. Right there. Let's go like that. So it went into the sell there. And now this week it's flirting. We can move this over. Let's move that all the way down to there, like that. And then what we'll do is we'll grab it right there and move it like so. And then grab that. Oh, no, not the zero line, but the number itself. And you can see here, it's flirting with buy now. There it is. So it's trying to lift up. We were talking about this yesterday, or at least I was talking about it yesterday. No one was asking any questions on it, but I was talking about it yesterday. We were thinking that the yen is going to take out that 5-year high of a couple of weeks ago, like last month. We just keep on thinking that, you know, and so there's the Nikkei. And I imagine that would put some pressure on the currency. And you can see here, it's like a big A. Matter of fact, if you go squeeze it back even further, I mean, this could be, I mean, this is like a descending triangle. Now, in this case here, it goes to sell there, goes there, and it doesn't make a new low, so now it's a triangle formed here. So you go like this line's here, and those lines there, and that gets, this is the 1, 2, 3, 4, 5. This is your classic Elliott / Gann triangle. I guess you could call it Elliott Gann Jones, really. That was the triangle. It was supposed to fail because it's supposed to come back down to this point here, and it did it. And now it's bottoming it out in here, but we've made another new low, so we'll see. And now it's trying to lift up. Now let's jump over to your other favorite. Let's take a look at the, where's that mouse at? There it is. Oh, you know what I want to do? I want to look at the Nikkei on J4X. Let's do that. Let's look at the Nikkei on J4X. And that's not it. There's bonds. Let's see, what's this? Let me see if I can find it. So I go like that. And let's see if we can find it here. Is it NG? No, it's not NG. NK maybe? Let's see. NK. Anybody know what the symbol is for the Nikkei on J4X? I'll wait for that. And let's just jump over to the GBP JPY right there. You can see it's moving up. And over on Chicago Quant, same situation. It's moving up. It's coming up to this plateaued area right there. I think this was like the 5-year high break right there. I think that's what that was. So we're getting, I think that's what it was. Or maybe it was a triangle we were looking at the time with that. Either way, you see we are above that area. And at the same time, you see here on J4X, it's moving up. And the pressure, look at it, I tried to correct and now it's taking off again on the upside. Our work here never went into the sell. It was in the buy because we had a green dot. So what was that? Right there was minus 0.1, but it wasn't a sell because we had a green dot. So now if it had done it on this one, that would have been fine. There was no dot, but that was a plus. You can see that was a plus 0.06. So this thing's been in a buy since here, and it's drifting up. And, you know, I've been thinking that, you know, oh, JPN, let's try that. JPN. Yeah, that looks right. Okay, cool. Let's see how that goes. Yeah, so I'm a little curious about what's going on here when it comes to the currency itself. Let's just take a quick look at the dollar yen. See, it's doing the same thing as your GBP JPY. And it has, I think we were talking about this, like it had, at first it had like a head and shoulders, like right there, and then it took off again. And so I don't see any reverse head and shoulders at this point. I mean, in a weird way, this could be the head. These are the two shoulders, and it's going to take off. But we're looking at 5- and 6-year highs at this point. So something's going on. And, you know, like I said, the inflation, as much as the metals market likes to hide the inflation factor, and not going to do too good a job at that. Let's put it that way. And the end result is that if you walk into a store and it costs you, you know, 20% more to buy whatever you wanted to buy, obviously you recognize that there's inflation. The metals market may not recognize it, but they definitely recognize it. And when you go to fuel up your automobiles and your machines with fuel, it's more expensive, and you try to find food to eat, it gets more expensive, and you try to buy clothing and other things. Look at wood, materials to build with. We've seen them go from like $4 and $3 a board foot to like $16 a board foot. That makes it look like the old Turkish Lira action, you know, which is pretty wild. So yeah, we're seeing that pressure on everything, and now we're, you know, your particular pairs trade that you follow, that GBP JPY, has been such a good trending product for a while now. Goes into a weekly sell here, finds a way to go down, goes into a weekly buy there, finds a way to go up. You know, now look at it. It's doing like everybody else. It's flatlining. Our math is flatlining. Let's see. There was a plus. This week is just a teeny weeny little sell in it. Look at that. Minus 0.02 at the moment. We still have till tomorrow. Is today Wednesday or Thursday? Today's Thursday. That's right. So, you know, we're seeing that action. All right. Anybody want to see anything, just shout it out. We'll go to it and explore it. If not, let's see. Where did we leave off? We were looking at the Rand. So let's see what Mr. and Mrs. Ruble are doing. Ruble moving down the same way. You know, we really have a hard time expecting a war. But, you know, the politicians need to keep us all confused and scared. If they don't, we're going to catch on that something's going on there, some fakeness. You see here that all that pressure down. Money is saying, no war. I guess what they'll do is they're coming after that low, but I would think that they would find their ways into the low 70s. I myself keep on thinking the ruble belongs down. Well, you've heard me for years now say, you know, when it was up in the 80s, it should be in the 40s, and it got to like 49.50, and then bounced back up again for whatever geopolitical craziness was going on. It seems like they're the boogeyman. You know, when in doubt, when politicians get scared and they feel like they're going to get caught at things they shouldn't be doing, somehow or another, Russia becomes the dog that they kick. Kick that dog. Yeah, exactly. All the other dogs don't get kicked, but that dog gets kicked. So, anyhow, you can see the ruble moving down the way I think it should. And at the same time, let's take a look at, we just got done really looking at the yen, but let's take a little bit closer look at it, like right there. You see that it's flirting with that that attempt to go after the 5-year high, which is right there. And we're looking at 116.35, and right now this product, today's high is 115.88. So we're only talking about 47 pips to get to the 5-year high. And then where do we go? You know, I don't know. Now that gives them what, more buying power? No, let's see, 120 yen to the dollar. No, so the inflation is having an effect on Japan too at the same time. You know, it's taking them more yen to buy something in dollar terms. That is. Last one that we look at is the Mexican peso, right there. You see that moving down. And we think that wants to go back into its normal channel and hang out. The whole continent here is starting to get very frustrated with this. We're finding out that, you know, what I say now, I've been saying for a year and a half, but, you know, now people are starting to accept it, and that is that COVID is just the flu. And everything the politicians have done has been for them to spend money. And, you know, we're seeing that everywhere on the planet. It's just going to become more pronounced as time goes on. As I always say, I used to say it more often on here on the webinars, time is your friend. And it truly is. If you're doing something right, you'll see it over time. And if you're doing something wrong, you'll see it very clearly over time. And then you can stop doing it and do something right. And so, you know, that's why we show you, you know, for a long time we used to have we used to put a camera before we jumped over to this YouTube situation, where we would have a camera on a intraday chart watching our math be accurate. And you could trade for the hour that you're watching our webinar, because you could see the, you know, the live chart of our mathematics. And so when you, matter of fact, we'll do that. We'll show you just right here on an intraday basis of the stock indices, but they're flatlining too. I mean, here's the S&P 500, and it's trying to, you know, I mean, it's, you know, there. What's the high there? That's 80, I guess, right? Yeah. So that's 80, and down here is 70, I guess. No, it's 65. There's 70 right there. So this is 10 points wide. And so the last 50, you know, 35, 40 minutes or so, I guess, you know, last hour, been hanging out in that range kind of quietly. But you can see it's going to do the same things. It's going to get tighter and tighter. Our math is going to get tighter. You see, like just like here before we had was that the London Open? That's the Swiss Open time frame, Milan Open, you know, Frankfurt Open, European Open. You know, of the markets now, you see they sold down on it, and they stopped, and now they started lifting back up, and now they're stalled out altogether. Let's see. So that's an intraday chart itself. Matter of fact, let's give a commercial to what's his name? I want to call him what is it? He's changed his name to Freedom. His webinar name, but our friend from Brazil, and FX Freedom. And he's going to do a webinar after ours on higher time frame and smaller time frames. And I hope he goes into spatial too. Market structure and trends, higher time frames and smaller time frames. And they're very important. We end up talking about that a lot here, about the, you know, using shorter time frames to prove that your longer time frames will be just as accurate. Our math always works that way. So in other words, we're showing you a shorter time frame. Matter of fact, I think we have a currency one in there. Where's that at? I think that's over here, isn't it? Let's go to here real quick. Hey, yeah. Don't we have some short-term time frames in here? I'm trying to figure out where we park those things. Not there. It's in one of these pages. Close. You know we have one somewhere around here. Where is it? Oh, here it is. It's probably in here. That's where it is. We have there's a 15-minute euro and a 93-tick euro. So let's take a look at the 93-tick euro. So it goes into the buy right here, and now it went up and now it's down. Same thing here. It was more of a topping pattern. It goes into a buy. Actually, they've given us volatility signals. The buy is more like right there because it's a red-green. You usually wait for it to get through that. And you can see as we get closer and closer to this financial news that's going to be pretty dramatic, things are getting tighter and tighter and tighter. So you can see like here, it goes into the buy, and you know it holds up a little bit. It goes into the sell right there for one tick, and then one bar, and then back into the buy again for that whole move. And then the sells have been kind of weak. This is a 93 tick. Let's smooth it out. We usually when we used to put it on the camera, we used to run it as a 1 Tesla. That's what we used to do. So there's a 1 Tesla. So it goes into the sell right here, and then goes down. I'm not sure. I forget what we were looking at 93. I don't remember why we had it that low, but we usually run a 1 Tesla. We start off with that, and you can see, it goes into a sell there. It goes into the buy right there. You get your pressure up. You can see it there too. It's trying, but we're getting a volatility signal. And the next one is the buy. They try to shake you out, but they don't succeed, and it goes higher. Here you go. You can see here now it's pushed it into a sell, and it's trying to lift up. We'll see how well this lasts. What's it got? 169 ticks. See that right there? Maybe we should make that white so you can see the box much more clearer. There you go. So you can see right there, 143 ticks, and now it's trying to come up. So this is actually a loss right there. Well, the sell was right there, and it was a win. If you have good money management, you made money out of that trade. And now, it's still in a sell right there, but now finally climbing into the buy. So if this goes up in value, the dollar goes down, could be a sign of big and increased inflation. It's so hard to say anymore. The rules have been thrown away so much with quantitative easing that it's hard to try to extrapolate what inflation numbers could do to the marketplace. The first interpretation will be if the inflation number is big, then they will be anticipating a 50 percentile increase in interest rates. But at the same time, let's just show you, we've seen the interest rates already make their moves. So let's see, where's a 10-year? There's a 10-year. And I was going to show you what the 10-year bond looks like right there. You see it's been moving down. When this moves down, interest rates are rising, and this is a daily bar. So, it's a good move, and it's yielding. Up in here, it was yielding, say, 1.8. Now it's yielding 2.2, I believe, the 30-year, and the 10-year, which was yielding like 1.45, 1.38 in that area, now is yielding 1.92 or 93. So they've already moved the interest rates without the central banks getting involved. Let's see what it looks like over on J4X. Let's see. There it is right there. There's the bond. This is this bond right there. So, as much as we think the news can move us, Money instead is just standing to the side, just waiting. That's what it really is doing. And so you can see here we're getting some strength here into the into this euro dollar pairs trade. But look how much it has stalled. It goes into the buy there, and has, you know, and the buy was at 14.39, almost 40, and the high is 14.40. I mean, it hasn't barely moved really. Let's see how much this pops up. I'd imagine it'll take out the high here of 44. See what it does there. Yeah, you know, we're seeing a lot of interesting events go on. We'll see how they play out in the end. But one thing is for sure is that the news is going to have some effect for some short period of time. Let's put it that way. Oh, there we go. There we got to their 144. Is it 144? Yeah. Yeah, it's gotten up to that 144 now. It's offered at 144.08. And let's put it up on J4X so you can see the ticks of the product itself. Right there. There we go. Now it's at 41. Is it backed off? Mine's at 44. I mentioned that'll update any second. 40. Mine's being bid at 144. I see that. I don't know what's going on there. They really got locked tight. Now ours is backing. Still, what's the high too now? 46, 47. There's my mouse at. The high is 44.18. Oh, I see. 14. Was it 143.98? Okay. So it's making a little pop there, and so it's sitting at 114.44 basically. It's sitting at the 114.44. That's what it is on Dukascopy. So that makes sense. All right. Let's see. What can we say about that? Just that it's in a simple little buy for the moment. And we get closer and closer. In 18 minutes, that number is going to pop out, and we'll see how excited everybody is. I myself have gotten tired of watching the fundamentals get thrown into the trash bin, so I'm not really that. I don't know. We'll see. Nothing follows through anymore. It's what the central bank wants in the end. That's what it really comes down to, which is kind of scary in many ways. All right, let's go over and take a look at the metals complex, and then we'll look at the energy complex from there. Oh, you're not seeing it. I just realized you're not seeing that tick thing. Let me just show you what we were looking at there. There it is. So it went into the buy right there off of that one, and just lifted up a couple of pips there, like that. Nothing major. And you can see it's getting quieter and quieter and quieter. All right, now let's go back over to the metals complex. Right there. And let's put the gold up there. Again, there's gold. Kind of quiet. Not worried about any inflation, is it? And let's check out silver right there. Silver's acting a little bit firmer. Right there. Showing its strength on a daily basis like we are right here. Being a buy for, see, this is the 4th day. See it flirting with its weekly buy. But right now, they're not, you know, we got gold a little down and we got silver a little up. So obviously they're not that excited about it all. Then from there, check out copper. If you want to see something wild. We went into that buy a couple of days ago. And we were wondering about, you know, what copper could do, but we had no idea. You know, but look at that. Look at that. It's going after like highs of the last couple months. And just as it felt like we were going to go back down into the 420s, we're at 440, and we went to the buy there, and it tried to flip into sells a bunch of days. We had red lines up top and red dots, and I kept on saying, well, I don't know, maybe they're going to take it down. I don't know what they're going to do. But here we are. We've been cruising along in that weekly buy. It tried here with that depression, but it just missed it by the hair of its chinny chin chin. And next thing you know, boom, up she went. And you can see it jumps into the daily buy here, and it does not want to let go. And now we're trading in the set. I guess today's high is what, 70.65. So they keep on reaching for the metals complex. Metals, not the precious metals have not been a really good indicator, but when you really think about the inflation factor, you have to say that at least copper has established itself in a $4 range and doesn't let go. It's run all the way up to almost $5, and it now is, it's comfortable in that $4 range. So maybe in many ways the industrial metal is more of an emphasis of what's going on, and maybe that's why we saw the silver make its pop. Silver may have made the jump, whereas we saw silver. Let's go back to the silver contract. I'm going to leave copper on here like that, and we're going to scrunch it up a little bit. And you can see here, like, we've had these moves in copper, and they're historic type of moves. And then when we go and look at the silver, we have seen in many of the same way, especially at the beginning of this year, or I guess it's the beginning of last year. You see copper and even silver. Silver got up to the 28s and backed off identically like copper. So maybe in many ways the industrial metals are much more indicative of the inflation and the concern about increasing costs. Whereas the gold, we talked about it yesterday again, in many ways in the back of my head, I keep on hearing, I can hear a voice say, gold is just a long-term investment tool, but it's not. I mean, you can trade it day to day, but it really is more of people thinking we're going to see $100 moves in a day, when it seems to be more of, if you just look back, historically, it's like, one moment it's $500, and the next moment, 2 years later it's $700, and then 10 years later it's $1,500, and 22 years later it's $2,000. It takes time for the product to really do its lifting thing. Overall, it's got a great return, and it's a protector to inflation. But when it comes to a day-to-day basis, it's not necessarily that loud about short-term perspective. Let's see. So at this point, you can see here, March silver, and at the same time on the left side you see copper, and the industrial metals seem to be trying to tell us something more than anything else. That's the ones that I'm paying attention to now, I think, after this conversation today, is that it makes me think, should we be, when we look at the South African rand and I look at gold and I go, okay, what's going on there? Or I look at the dollar, the Canadian dollar against oil and gold, maybe copper is trying to tell us the real story. And so when we look back at copper, let's make copper a whole page. When you look back at copper, it's telling us that inflation is kicking up. And it won't let go. It won't go back down into the threes. How many decades we saw it get up to $4 and then just march along in the threes? Now look what it's doing. It's marching along in the fours for over a year now. I mean, that says something. It seems to have established a price area, and it's not letting go. So it must have, the sensitivity of it must be screaming at us on some level. That sensitivity is telling us something. It's something we may explore. This webinar may be labeled the copper-silver connection and with inflation. And we may be coming across something that we didn't really think about until today. Because we're tired of seeing the metals market not perform the way we expect it to. So, one thing is for sure, what's screaming out loud is that copper doesn't seem to really care. as much as we saw that crazy weakness and action we saw, over the last couple of weeks, as you can see, let's put it up on Chicago Quant again too. Right there. Look at it. Doesn't look like a product that's upset about anything, does it? Just seems to be slow and steady and comfortable with who it is. I'm comfortable. I'm copper and I'm comfortable. And then you see, like this last week and a half, they kept on trying to drive this thing into the sell. And by the end of the day, we had green dots and we were above the line. But we went down a couple times. Oop, that's that zero line right there. And, this product just refuses to go into a sell. And look what it does. It goes from 440 up into the 470s. So obviously, this could be something to really observe. Want some instant gratification. Silver might be the actual product. Well, I'll tell you this, it has been volatile. It has. All right, from there, let's take a look at platinum, see if platinum is giving us any insight whatsoever. Platinum seems in many ways like copper, but just just as a precious metal more than, unfortunately. And again, we've talked about it. We have a really hard time relating to platinum as a discounted product to gold, but that's where it's at. And you can see the triangle that's forming right there on this daily chart. But still hanging out in the weekly buy, not giving up. And 900 seems to be the surface of the bottom of this product now. All right, let's go over to the metals, energy complex. There's crude oil. As we said, we saw the March. That's the spot, and it's flirting. You can see it's only -6 now, -0.6. Let's put it up over here. Let's take a look at Brent. See what Brent's doing. Right there, Brent is acting. Well, at the moment, it's a little weak. Oh, no. There you go. You got a green right there. So it's coming into its bottom. On our back month, the June contract that we also follow, right there, I saw this morning was flirting through the zero line. Yeah, now there it is. It's actually, it's really pushing, trying to push up the back month. And this has also been in a weekly buy 1 week earlier too. So it's been in the weekly buy from the $70 area, and now the high, I guess, was right there at 87.81. It's almost 88. And here today, you can see it's almost at 87 again. So the inflation, the magic inflation number is pushing and pushing and pushing, and before you know it, in 6-7 minutes, maybe we'll have a better insight to it. Okay, let's see. Where else do we go from here? Oh, let's take a look at natural gas. There is nat gas in the States here. Still pressing down. We're towards the lows of the day. Let's give it a refresh. Still down towards its lows. Let's take a look at it over on J4X. You can see the American natural gas right there. Same numbers. And then let's take a look at European natural gas. We would hope the thing is in the 27s. But yesterday it started to make its march back towards 28. We were kind of surprised about that. But then again, you have a little bit colder weather, I guess, than normal. There you go, back into the 27s again. And we're only paying basically $3.90 a unit, and you're paying 27 something a unit. It's coming down from the 30s, which is nice, and we hope that this keeps on moving down. Especially because people need it to, power different things like electricity and heat and so forth. It is a what's the best way to describe it? It is an important product. Let's see. What else can we say about that? I guess not much more, really. I'm trying to think. Where are we at this point? I guess that's about it on the energy side of it all. Now let's go over and take a look at the stock indices. We'll put the NQs up on there. That's the Tech 100. Let's go with the S&P 500 to start off with. There's the S&P 500. This is like the the world index itself. Half the companies are outside the United States. And let's take a look at it over here. We'll find the mouse. There it is. You see it's gotten quiet. Went a buy for the last couple of days, and we're playing with the weekly. It's cleanly through all week long since it went up into the sell. See, we got back to we thought we'd get back to here. That's what we were saying on Monday. It'll probably go up and play with this stuff. And that's where we see it now. All right. From there, let's go take a look at it in an intraday basis. Let's see, which one is it? Right there. And let's make it right there. And there's our intraday going on. And it's the S&P 500. Went into the little cell right there. It's just a mild, soft little drift. We've got about 2.5, 3 minutes. Should we keep the? What we might do is we'll stay on, maybe to the end, or maybe I'll trade one or the other. If anybody wants us to stay on for the next 3.5 minutes when the inflation number comes out, say so, and we will. And you can see the nice trending. These products do a nice job. Our math does a good job on it. You see the pressure on it right here. It breaks through there. You see the blue drops below both of them, and the pressure is on. I guess we're going to see, what's it, 2.5, it's about 3 minutes away now. It'll be interesting to see how that action comes. And FX Freedom is going to be doing a webinar right after this in the next half hour, talking about short-term trading or short-term charts versus longer-term charts. That should be very interesting for some of you out there. I always find it very fascinating. I see new inflation data in the next 2 minutes. We'll see how that does. It'll be fun to watch the stock market make its quick shift back and forth. Oh, sure. Love to, George. Dukascopy gives us that room to do that, too, which is nice. And we'll see how this goes. What can we say about any of these products overall? It'll be fascinating is to throw up the 30-year bond. Just a real quick one. Let's see, where's it at? Let's put it over on J4X. See if they give a little zigzag out of that action right there. You see it's trading at 153.11 at 16. Remember, this thing trades in 30 seconds and 64s. So it's a wild market. It's definitely a wild market. We're getting a nice little leaky action going on here, but I don't think that, I don't know if they've. This kind of makes me suspicious more, I guess, this last move up, where as much as this thing's been leaking, it hasn't taken out this low. Let's see how this goes. We got about a minute now, and it'll be interesting to see how this plays out. And then you can see here the bond market on our left side. So we're getting a good view of both the interest rate sector and the equity market. Going to be some fun times here, All right, what I'll do is I'll fill in the title while we're here. goes the title. All right, with about 25 seconds left to go. Oh, they're starting to put some green dots into it, so they're starting to reach a little. Let's see what goes on. There's a look at two. If it stays like that, two volatility signals right behind each other. It did that right here, right there, and made its little liftoff from there. And the number is out. And let's see what's going on here. There it goes, moving down a little. Bang, bang. And should, in the next 3 seconds, see a little real action to it. Oh, look at the bonds, 152.71. Weren't we 153.11? And the stock market has dropped. And it's still dropping. Oh, let's hear what they have to say about this. Okay, so the numbers are out, and the January CPI let's see. So 10-year note was 193, and that was the interest rate on it. The stock market's moving down from it. So we're just, okay, here we go. And here's the data itself. Okay. They're doing unemployment also at the same time today. It's always every Thursday. And you can see the stock market's been in this little push south throughout this whole thing. And CPI was 0.6 versus 0.4. There are hot numbers, there's no doubt about that. You can see the stock market has just slid from it all. So we've gone from this 80 area down to the 50 area. And okay, so they're saying 7.5 now. We're back to February of 1982. Huh. August of 82. They were expecting less pressure, but not. All right, so you can see there, look at the bonds. They went from 153.11 down to 152.49. Remember, as the price of a bond goes down, interest rates are rising. And so, let's see if I can see. 10-year now is yielding 1.97. And before the news came out, it was yielding 1.93, almost 1.94. So a couple of pushes in that direction. All right, traders, we're out of here. This is Doc from North America talking inflation. Happy trails to you until we meet again, which will be tomorrow, TGIF. Happy trails to you, to all our trading friends. Take care, traders. Ta-ta for now.